Hello, my name is Troy White. I'm with Hoodoo Financial, and you have to forgive me a little bit if the audio is sounding jacked up because I'm still testing out microphones. This microphone I actually tested before, but I think I had the extension wire was not stereo. I think that was the problem. So I'm anxious to know how this sounds. So I'll just keep talking and we'll see. So what I'll do is piggyback a little bit off the last video that I made in which I was kind of all over the place, but I'm trying to discuss investor behavior and behavioral finance issues and a little bit about collective economics. So the just get into the investor mentality specifically a little bit. And I'm not sure exactly what I want to say about it, but I do want to address it. And so start just talking some of my experiences is investors. Well, here's some facts. Investors hate to lose more than they love to win. So what that means is people hate losing money more than they love making money. So that drives their decisions more so than anything. In fact, I was talking to a friend the other night, and he said this before. My friends call me T. Roy. T. Roy, soon as I get this, I'm gonna shoot you $500 to put it in some of those stocks for me. And I said, no, you're not. First of all, he's saying when he gets his tax return, he's going to do that. So right off the bat, we know people don't do positive things with their tax return, right? Whatever you had planned for it before it arrives is going to change once it arrives. And then I had to point out to him, I wanted the mindset to change. Like, you're not going to give me any money. I want you to understand that you have an account and you are responsible for what you do in your account. And no matter how many advisors or planners you have, consultants, tax attorneys, and all these things, this is yours. It's your responsibility to understand what's going on. And really, it's your responsibility to drive the ship. You can't just say, or it's not wise for you to just, to your advisor, just, yeah, whatever you say, we're going to do that. Well, I've always felt uncomfortable when people do that because a knowledgeable investor is better to advise, because you can consult with them and you can talk to them, you can understand their motivations and what they're trying to achieve, and they can they're not scared of financial terminology. It's just easier to come to a consensus, to come to a decision, and that person won't be scared to act because they'll feel that they've consulted with their experts, and any backup, follow-up, due diligence they need to do is available to you. And you know, a knowledgeable investor will be willing to do that. And it's just much easier. And I found that the investors who don't really know anything about investing, they just rely on you too much. And it's uncomfortable to me. I don't, you know, especially the one thing is for certain, the market goes up and it goes down. So it's usually a knowledgeable investor understands that, but someone who doesn't, they just expect it to constantly go up. But the point is, in fact, I don't even want no clients like that no more. If you're not willing to learn, that's why we have an education component to our firm. You're going to have to learn something, or you getting cut. You're off the team. You can go down the street to Schwab. We don't want you. If you're not willing to actively participate in some way, uh, then really, it's other people out here. I can't help everybody. So you taking up space for somebody who's trying to be about it. So you can kick rocks, go down the street, work with them. They'll let you just sit there and do nothing. And, I'm not mad at you, but the problem comes when those who are not knowledgeable and are very inexperienced and often, the broke ass clients who don't know nothing, they expect they give you X amount and it's just going to go up. But I'm trying to get you to understand you're not giving me nothing. That what's in your account is yours. That's not mine. I just try to tell you the best thing to do for it. But like I said, the stock market go up and it go down. So the successful investor is one who understands how to react to both. So you already know there's a guarantee the stock you bought will go down. So what you gonna do about that? It might go up a few times, but then it's gonna go down a couple times. So, how often are you going to be looking at this stock? We need to understand, that's what I mean by getting into the investor mentality. We need to understand your risk tolerance. Again, write that down. Risk tolerance. What is your ability to tolerate risk? What that means is, I put it to you like this. If you invest $1,000 and it goes down to 700, how does that make you feel? Are you nervous and are you mad? Are you scared? Do you want to go buy some more? Or do you want to just cash out and sit on the sideline? So all of those reactions are important because the way you react will dictate whether you have a gain or a loss, not whether the stock went up or down, but it's how you react to the stock going up and down. So you get scared because the stock went down, you sell it. That means you just locked in your loss. You definitely are now a loser because you're scary. Why are you scary? Because you don't know what you're talking about. As you start to learn, so your risk tolerance increases because your knowledge increases. That's just the way it works. The more you know about something, the better you are going to do it. Playing basketball or anything, football, the more you practice at your free throw, the more free throws you're going to make. So the more in football, when you study plays, you realize, oh, I just followed the play. Everyone's going to do their part. There's going to be an opening. I'm going to get the ball. I'm going to score. But if you're just playing street ball, hike, everybody go. That's the common investor is just out there, just running, we're trying to get a touchdown. But we need to understand the best play to react to what the defense is giving us. And so that we can methodically increase our wealth and methodically move down the field, so to say. And so these things are really important. And then combine that with the mentality of your advisor. So, like I've said in other videos, I try to establish that people understand, who I am, so that if in fact I end up working with some of you out there, then you need to understand my attitude because I'm going to have some expectations from you as well. So, you need to be knowledgeable. You can't come to me, you come to me, why my stock go down? Why this, why that? I'm like, did you take the class that I sent, the lessons that I sent you? Did you read some of this information? You coming to me talking like that? And, people be mad about when they stock go up or down, not understanding that, this is actually a good thing. You're in a long-term account, retirement account, you got a couple shares of stock and this thing go down, now you're mad. Man, this is a great thing. So, that's my understanding. But the person come with and I say, This is an emotional market. This is emotional thing about money. So you come with me with the emotion, and I'm emotional right back at you because, hey man, you messing up the plan that we put together for you. You wilding out, going tilt like the machine is broke. You know, that's not good. That is not good. I might hang you over the balcony just like on the Five Heartbeats. My office hours is on the internet. Get out of here. Go down to Schwab because you can't come to. You got to understand what you're talking about because it's just not conducive to you even gaining wealth. Because that mentality is, I'm gonna shoot you this money. So you think I'm gonna double you up or something? It's not like that. We need an in-depth uh, feeling out period. I have to understand. You're gonna have to. I got to send you some questionnaires. I need to understand some things about you, and sometimes even, you know, your friends don't want to tell you all that stuff. Your friend, I understand. I understand that everyone makes it look better than it is. What I used to think is that everyone is really living according to their means, and they all doing better than me because they all got all this baller stuff. Where I'm within my means, I only got mere mortal things, and lo and behold, what find out is the whole world is fronting, and I'm the one trying to be, you know, do it right. Where everybody else is skating on broke all the time, but they got big things and it makes it look good. And so I already understand that about America, but clients will have an attitude that sort of like even I'm going to judge them. But the funny thing is, it's just numbers to me. I know the numbers are something important for your life. But to me, the important part about it is me understanding what you're trying to do. That's the emotion part. The numbers are nothing. It's literally nothing. I literally don't care how much money you got. And so I will talk to a client, especially most of my clients are my individual people who are clients are friends and family. Most of my clients are institutions. So, but the friends and family, I'll notice that when they'll make an excuse to me and say like, "Oh yeah, you know, I did this and I did that. I was, some financial move that they know was wrong, was not good to make, and they're making that excuse, and I'm like, I don't even know what they're talking about. I'm like, okay, oh, because man, then I realized, oh, they think I remember what the details of their, financial life. I'm like, oh, they trying to explain away some shit to me. Oh, I wish I could get them. No, I don't remember that. It's numbers on a page. I'm looking at it analytically. I don't remember your personal information. And so, people will literally say, remember last year I made X amount. No, I don't remember what you made. I never remembered what you made when I looked at it. It's just a number. So I'm only looking at the number to understand how it fits in with everything else we're doing. Literally on a daily basis, I see billions of dollars in digits in the computer. It's nothing but numbers. How many commas are there? I can zero in really easy. My eyes are like trained that way. Like, oh, that's 883,562,000. I mean, $562.45. That's $888,562,473.99. That's 9,800,000,000, just on down to, just by looking at it. Oh, spreadsheets with lots of numbers. So your number is just like a number in there. I don't care about it, from that. I understand that, people are emotionally tied into their well, I make X amount, but they don't understand that person over here make X amount, but they in the hole by this chunk, and you make X amount, you are only in the hole by this much. So who's broke and who's not? Both y'all is living above your means, but they make more, they way above their means. You only right here. Point is, we need a strategy that's gonna fix that if you want to fix it. Everybody doesn't want to fix it. Some people just, I just want, just be investing. They don't care, they don't want to learn all that. And, I can tell that, okay, I'm gonna help do the best that I can for them with the information I have. But overall, if they would have, if we could iron it all out now, they would be far better than trying to, get it all together later. Because time and money are interlocked. The time value of money. That's what investing is all about. The time value of money. So anyway, so I say there's an investor mentality component, there's the advisor's mentality component. So those two combine they have to mesh together because those two are going to combine into some action. So the advisor is going to drag the client, say, hey, you need to do this right here. And the client, needs to interact. You can't be opposed to the client. Sometimes it's like you literally have to fight your client to do something. But a lot of times it's because you got that comfort level, that you built. And this is why I'm saying, most of my clients, personal friends and family, or a friend of a friend, So it's somehow that I only take on clients where I can talk to them, where I can keep it real. I don't have to, oh, yes, Mr. Kavanaugh, I can't do that, man. I mean, I can, but when it relates to individual clients, why do I want to do that, man? I'm not. You'll be surprised. I'm a finance professional. I know money and investing and banking. I'm in the banking industry, but money don't motivate me. I think it's because I just understand it's just a tool. It's just digits in a computer. That sounds stupid to people, and it sounds stupid to me as my old self. But what I know now, it's like, wow, that's the key component that I wish we all knew. That shit is a digit in a computer. And the same, we trying to get, say you're trying to get $1,000 and right now you got nothing. You got no means of getting $1,000. The energy and the activity and the effort to get, probably more than 1,000. Let's say about $10,000 into that 10,000, a digit of $10,000 into an account. That same effort. What if you use that effort? It's to make it 10 million instead of a batch of 2 items. What if I sold a batch of 2,000 items, whatever the item is? Well, what if I found the client that needed 2 million items? The point is they exist. I mean, whatever you sell, you might have to think outside of your region, obviously, outside of the country. This is the earth. We live on the whole earth. And you're in America. So that carries some weight right there. Call them. Find out where's the vendor that needs 2 million widgets. Hey, we're a widget manufacturer in San Francisco, California. Yeah, it's a wonderful day out here too. Hey, you need some widgets? We got 2 million for you. How many you need me to send today? Oh, just 500,000? Okay. Well, here they come. I mean, that's a oversimplification, but I mean, if you took sales classes and things, that's what they're going to teach you. And, no matter what industry you are in, the bottom line is you're selling something. You have to sell. So think about, if you're selling pencils, you could sell a 10-cent pencil, or you could sell to all the schools in the Western hemisphere, or, in the Western region of your state, and you be the pencils dealer. So, that's 2 million pencils. Or you could just walk around. Hey, anybody want to buy a pencil? It's hard enough to do that. I'd rather take that hard job, try to sell to all the schools, and just do it that way. So, it's just those type of thoughts. And again, working with the right advisor to plug those type of concepts into you, and to bounce off. I'm going to challenge you. I'm good at devil's advocate. I could argue something I don't even agree with, but especially if you're weak-minded, I could poke holes in everything you got. I could take the devil's advocate side, and if you weak, we don't need you arguing on our behalf. I could argue for the Klansmen against you. You don't got no argument. We need some people who can speak to these issues. So that requires you to learn something. And so at least learn something when it comes to your finance and investment. It just makes it better for you and for the people that are helping you. And so, it really comes into play when the portfolio investing is going to be somewhat passive, because we set it and you can forget it. It's just going, and we get your investments going like that, where everything is automatic. But what about your active investments? So, I'm an advocate of you becoming an entrepreneur of some sort. Start a business, start a franchise, start some sort of side something. And so that means, that's active investing. You got to actively do stuff. So you're going to need advice. You're going to need advice that more than what I could give you, and including what I can give you. So you need a quarterback who can interpret some of the things you are saying and some of the things you want to do in the direction of your business, and be able to connect you with the resources, with the point you in the right areas that can help support your business. And again, that doesn't have to be a financial advisor. A lot of business advisors, but often that advice comes from the finance industry. When you borrow, a lot of times, that, especially as a business, it's going to come with some consultation to make sure you don't fumble the ball on the money they just loaned you. So in terms of financial advisories, when you're with the big firms, they don't care, you're a number. But the smaller ones, then when I say smaller, meaning in terms of the people that are running this business. So it's not about just, capturing a wide net here, everybody in America, bring your money. The smaller investment firms are a little more specialized, a little more hands-on, a little more babysitting to their customer base. And they are able to help people better, if you ask me. But, you get a little more personal attention. And so you need those things. Wherever you're going to get them from, wherever you're going to get that type of help, you need that type of help. You better find it somehow, mentor or whatever. But like I say, on the active side, that's starting your business, and also the real estate. Both of those are active investment strategies. You're actively doing stuff. It's ways to passively invest in real estate, and I can help you with that as well. But the active parts, that's like, that takes a lot of, you can do it, man. Being your cheerleader. And some people are more knowledgeable than others. So there are some people who, they want to flip property, but they don't know nothing. They don't know what sheetrock is, and there are some who want to flip properties, and they are the contractors, but they don't know the business side. They don't know the I hesitate to call them tricks. It's just aspects of real estate that you don't commonly know. And, you know, I'm a person who is just always studying, always got another book, usually some sort of a textbook. Uh, and when it comes to real estate, it's a it's a lot of things that I know, and then there's things I know that I don't know, and then there's some things that I know but don't know enough of to consult you about it. So it's so what does that mean? You're gonna have to go to 10 different people to get all of this information, or at least have someone who's knowledgeable about all these areas. And then you can sit down and say, okay, what strategy are we going to, engage in on this particular property? Are we gonna fix and flip? Are we gonna, hold and rent it out? How are we gonna get into the property? We get in on the right price. What's our ARV going to be? What are the expenses to put this place together the way that we expect to get the maximum value out of it when it hits the market? There's just a million things to consider. And so, again, in that arena, that's one of my interests. So I'm going to study on it. I'm going, be all over it. So, if you're someone who is working with me, then to me, that's an opportunity to learn some more. Oh, okay, yeah. And often I know more than I thought I knew. I usually go in to learn something like, oh, okay, yeah, I want to be part of this deal. Oh, and then come to find out, I know such a large component that was missing. And so I was able to contribute to it. So not only did I learn something, I was able to contribute something. So that's how it usually works. So anyway, I'm not trying to sell you nothing. I'm just speaking about things for you to consider when you're working with finance professionals. And I think I'm going to cut it there. I'm just kind of just touching on a little bit of the financial planning principles, and we'll talk some more later. Thanks for listening.